Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I am recording this as usual late Friday morning on November 4th. Okay, so the market kind of had a little bit of not a little bit, but a big quick rejection from the prior couple of weeks, but nothing's really changed. We're in sort of longer term downtrends in the market and most stocks. I would say that the rally that started a couple of weeks ago, at least initially, was really led by a lot of defensive stuff, some yield things. There was some hope, obviously, that interest rates might have peaked or the Fed might pivot. And growth stuff has been lagging. Plus, I would just say on the growth side of things, and really the number one characteristic of the market this entire year, is I just continue to see stuff, especially on the growth side of the equation, test new highs, test multi-month highs, and quickly reverse. There's just a lot of selling on strength still. That will change one day, and when it does, I do feel like it's a pretty obvious pattern, and there's going to be a lot of people sort of caught selling or shorting, at these new highs. But it hasn't, the pattern continues to this day, which just tells you the big investors are not out there buying, a million shares of this and a million shares of that in some sort of buying program. They're still letting things go when things, rally up into obvious resistance. Okay. So we're still waiting. We haven't done anything. We're still 85% cash in Cabot Growth Investors model portfolio. I'd rather be investing, but I'd also rather be making 2.5% of my money market fund than getting killed in some of these stocks. Okay, so we're still waiting. We're also, though, watching. What's interesting is last week, by the letter of the law, really right now, by the letter of the law, the intermediate term trend is actually pointing up, and that's really due to the strength in the broader indexes. It's not super strong or anything. I kind of label it still on the fence because 1 or 2 days could really change the picture. But it's kind of interesting that we're still kind of hanging in there in some of these small caps, mid caps, and see where it goes. All right. Plus, I'm still seeing a lot of stocks that are, they basing into earnings or they reported earnings, but they're still kind of hanging in there. And they've been resting for 10 weeks as part of sort of a year-long, consolidation. So I would just say this: if the market, I'm not predicting this at all, but if the market could have 5 or 6 good days, and if we got some breakouts from here, I think we could have something to work with. I don't view this right now, this second, as something where it's like, hey, the market just needs to go up 2 weeks just to get off its knees, and then we'll see where we are. I kind of think we've put in some work over the past month and a half in terms of positive divergences, some stocks perking up, consolidations, things like that. But now, of course, we still have to see it. So right now, we're still obviously defensive. We're waiting, but we're also watching. And let's just see if the market can kind of, against all odds, sort of turn around here and get some stocks to actually lift to new highs on earnings going forward. Okay, let's hop into the charts. As usual, I'm using MarketSmith. Great program. It's a product of Investors Business Daily. You can learn more at marketsmith.com. So we'll start with the NASDAQ as usual. And the NASDAQ is actually the weakest of the major indexes, which isn't the greatest thing for me as a growth guy, or just I think for the market in general. Usually you see some of the risk-on stuff start to percolate a little bit before the end of the down move. But be that as it may, there's a lot of the Amazons and Microsofts and Googles and Facebook or Meta or whatever they call it getting hit, which is certainly weighing on it. And the S&P 500 isn't as bad, but it's also on the big cap side of things a little bit worse. But notice how it's actually kind of holding this green line, which is the 25-day simple moving average. Not the be-all, end-all, but that kind of plays into our intermediate term trend model. And when you look at the broader indexes, like here's the IWM, a little bit hard to see on this chart, but it kind of came right down. It was up here, hit the 200-day line, backed off on the Fed, but held the 25-day line and is now bouncing. Here's the MDY. This is mid caps. Same sort of thing. Held the 25-day line, bouncing. And then you have the New York Composite, which has more commodities and financials and stuff. Actually, it's the strongest index. It didn't even touch the 25-day line. And it's bouncing. So what I meant when I said in the intro is not like, hey, we're, we get above here and it's 1999. No, of course not. But I do think that there's a lot of names, a lot of areas that have been relatively resilient really since back here in late September. And they've put in some work. They've kind of technically turned the intermediate term trend back up. I'm calling it on the fence, kind of neutral here. But if we came into next week and it was a really strong week and some stocks really popped out of there, like I said, I think we'd have something to work with. Doesn't mean you'd go fully invested. Just means I think you'd have something to work with. So let's just keep our eyes open and keep our feet on the ground. It seems like that Fed thing did more to hurt sentiment than to hurt charts, at least to this point. Meaning, I think everyone expected, okay, here we go again, another leg down. Maybe that ends up happening. It could easily happen, but so far it really hasn't. Okay, so let's just take it from there. I would say that you look at the daily chart here is kind of hard to see, but this is IPO fund. You could look at whatever growth fund, but just IPO, you know, it's scraping its lows. The NASDAQ I showed you was weak. The ARK fund here, I don't know, I guess it's not scraping its lows of the last couple weeks, but it's just still buried. My point is it's buried. The growth stuff is still underperforming. Meanwhile, you have, you know, the XLP, which is consumer staples, you know, looking, you know, peppier. You can see it's actually above the 50-day line here, well above the 25-day line. Really, if this was a major index, you'd say this is the strongest index. So again, that's kind of one reason we didn't really take much action. We didn't take any action on the last, you know, little bit move higher here, because really it was being led by defensive stuff and some commodities, which I'll get into from there. The other thing, just running through some of the evidence, you know, just, I mean, I don't want to be the guy that comes on here and says, see, you shouldn't bottom pick, because, you know, if you own one of these, it stinks. But yeah, just try not to bottom fish. You know, some of these things in a bad market can just go a lot lower. And even though Twilio coming into this week was already down from here to here, okay, this week it's down another 40%. So, you know, that's obviously an unusual move, but you're seeing, like, you know, cybersecurity, like here's Zscaler, obviously had already come down quite a bit coming into this week. And then this week it's down another 20%. Obviously extreme, but just you want to be careful with the bottom fishing. If you want to do it like you're buying a lottery ticket sort of thing. Just keep it super small. But really, these things aren't going to be where the big money's made next time, the next go around, I should say. And then just to show you, I probably don't need to, but like this is AEHR. I don't even know how to pronounce it. Air Test Systems. Chip equipment. Numbers are great. Smaller cap. You know, a little thinner, and obviously moves around. But again, you kind of have this thing where it breaks out here and it runs for a few days and then it comes right back in. Okay. Here's XMTR, which I've mentioned. I still like it. It's on my watch list, Xometry. XMTR, you can see on the weekly chart, it's got this sort of kind of nice rounding pattern, had this great, you know, accumulation here, multi-months. And now it's messing around. But just look, you know, this week it tried to tag new highs. This was just a few days ago up here at 64. And today here it is at 54. Okay, so we're just still sitting. Now this again is not a liquid leader, but that's part of the problem is there's not many liquid leaders out there or potential liquid leaders. And these things are just kind of getting sold, you know, on strength at obvious resistance. Until that changes, the market's not going to get going. I'm not saying we can't rally for a few weeks, but we're going to need to see some of these things pop out and stay up and lead. That's what, you know, you're not just going to go into a new bull market with no leaders and nothing hitting new highs. You're going to have a lot of stocks hitting new highs. So we'll see how it goes, but so far we're still seeing that going on. Okay. Now, with that said, let's get into the commodities. I know I mentioned this before. We are seeing kind of a resurgence of a lot of different commodity areas. They don't all look great. In fact, some even within the same area look, some look good, some don't. And that's kind of natural because it's not like the commodity moves in the first inning here where everything's just going up. It's obviously not later stages, but it's certainly not early stage. Schlumberger to me looks like, speaking of liquid leaders, I think it could be a liquid leader in the oil space, excuse me, especially in the oil service area. For about a year here, you can see on the weekly chart, it did net, it did nothing as of about 5 or 6 weeks ago. And then it's really come alive. You can just see on the bottom here on the volume, and you can see the stock just racing higher. Now, it's kind of hard, you know, these things, sometimes commodities just go, other times they go and then pull back sharply. So I would still try to get a decent entry point, but this entire action right here, after a big consolidation, big numbers, good conference call, so on and so forth, it is pretty interesting. And there are some other, it's not just a Lone Ranger, there are some other names, obviously in the oil service space looking good. Arch Coal, they announced like a $10 dividend or whatever. This is one of these, it's not oil, but it's coal, but they're doing the same thing where they're paying out all their cash flow. And you've just kind of had this long, it looks sloppy on the daily chart, and it is sloppy, but you're going to see it kind of had this big sort of consolidation. Nice shakeout here, as it turned out to be a shakeout into like September, October below the 40-week line. But it's kind of changed character here. We're starting to see some buying, just kind of a name to watch. There's, again, same thing. Some of the coal names are like, but a couple of them look better and better. In the oil space, I've mentioned this before. I go back and forth. I'm still seeing a lot of kind of like, you know, is this a top? Like, let me show you Devon, DVN, which has been kind of the number one leader in the group. And it kind of worked its way all the way back to its old high. And then after earnings just got whacked on huge volume. Now, maybe this is a shakeout and it just kind of kites higher from here. It's certainly possible. But we're still seeing kind of like this sort of sloppy double top stuff. I would also just notice, I'm sort of talking against myself because I'm going to mention some of these names, but you just see since the consolidation started here with Devon, you're not seeing a lot of buying in here. It's not like, oh, institutions really bought the hell out of that dip. Not really, so we'll see how it goes. Maybe this is the final shakeout and it goes. It certainly could. But anyway, back to the other names. You just want to be a little careful. I'm up in the air about the exploration names. I kind of feel better about some of the service names. But Cord I still like. CHRD looks pretty good. And FANG, which is Diamondback, they still have earnings. You can see this is actually kind of moving out to new highs. And I kind of like this it's more of a persistent advance. You have had a little buying volume. The company has made some moves that could give, improve investor perception. So we'll see how it goes. So anyway, oil looks good in general. Service maybe a little bit over the exploration guys. EOG Energy gapping up on earnings today, new high. And these charts on MarketSmith are not dividend adjusted, so I'm sure it's a few bucks higher when you adjust for dividends. Okay, and then back outside of oil is Steel Dynamics, which looks pretty solid here. You can just see it's rounding out here. It really came under accumulation after earnings. And then a lot of times that first pullback can tell you a lot. Like we just looked at those other stocks, growth stocks that kind of did this, and then it comes right back in sort of thing, or worse. So far, you've had the opposite here with Steel Dynamics and a lot of these names, which is straight up, and then sort of a modest controlled pullback popping today. Could easily work its way lower here, but overall looks proper, okay? Outside of commodities, I still like, so they reported earnings this week. So this is Albemarle, whatever, ALB. This is what I mean. I'm still seeing a decent amount of stocks that have this sort of, I'm not going to count it out, but call it 10 weeks ballpark, sort of consolidation. And it's kind of part of this, year-long thing during the bear market. And net, the stock really hasn't gone down since its all-time high last year. That's pretty damn good. Okay, and then just recently here, so, it got hit on whatever day that was, I guess, the Fed. Then it reported earnings and it opened way down here. But, the institutions, as opposed to selling that stuff up on strength, hey, here it's like, oh, no, we'll pick up another, 30,000 shares here. And, they buy it back up. The stock really isn't that far. This is what I mean. A couple of good days, all of a sudden you're like, wow, this looks great. This thing's breaking out on the upside. Lithium, or I should say Livent, which is symbol LTHM. It's smaller, same area, same earnings patterns. It's more volatile. It's further off its high. So you can kind of pick your, hopefully not poison, but, pick your winner there. But you can just see, it's kind of setting higher highs here, even during the bear market, holding the 200-day line, kind of a shakeout here hopefully a shakeout on earnings this week. So I'm still keeping an eye on the lithium names, long story short. Chips have been tough. I mentioned that AEHR, it looks pretty good. This is Pi, Impinj, I don't know how to pronounce it. Impinj, PI is the symbol. And you can just see it's a smaller, thinner name, got destroyed, came all the way back. And then again, when you have these deep corrections, what happens? Usually you have a base in and of itself that's more controlled. And that's what you saw here. And what I like about it is not only is it gapped on earnings, but it's held up so far. Could we come in next week and it gets nailed? It only trades 400,000 shares a day. Yeah, we could, but so far so good. And the numbers are very, very big. And I would tell you that, let's see, 300 funds own shares. That's not amazing, but it's not like, 50 funds or something that own a Chinese stock. So it's got some sponsorship. PI is just one to watch in that group. Solar is kind of popping back. I don't know if it's kind of a play with the commodities. ENPH had a 28% correction top to bottom. Actually, sorry to keep switching charts. Let's just stay on the weekly here. It had this long consolidation. Again, it kind of breaks out, new RP high. And then, it just had such a big run. What happens? It needs some other consolidation. Well, this consolidation was a little sharp, 28% in just a few weeks. But it did pop back on earnings the other day. And so far, again, you have the Fed and reversals and selling on strength and all this. But so far, it's kind of hanging in there. Now, maybe it pulls in, fills the gap, whatever. But so far, it's one to watch. First Solar, again, these were the two leaders of the solar space before. And you can see First Solar, great run, finally pulled back below the 50-day, shook people out, I think including me in top 10. And then, it's resumed its advance here, nicely new highs. And what with some of these, you're just thinking, hey, normal pullbacks, could be buyable if you want to play something like that. Biotech space or just medical space. So Vertex is a steady Eddie. Not great earnings projections next year, but not super expensive, reliable. You can see on the weekly chart, it's not like it's super dynamic, but it keeps kind of making higher highs. Found good volume here on earnings. So to me, it looks like a stock that it's not going to set the world on fire, but if the market, you can see in here, it's just pretty tightly in here with this one shakeout day ahead of earnings. If the market can get out of its own way, it looks like it does want to go higher. And then just today, we'll see how it closes. Earnings moves are always iffy, but this is Insulet, which is a pod maker. I mean, the symbol is pod, PODD, so, for diabetics and stuff. But it's really kind of topped out a while ago, had this big consolidation. Nothing really, stood out above it. I guess you could say it's an inverse head and shoulders or whatever, but I don't really play that game. But it just kind of came out of nowhere, but started to find some buyers just a couple of weeks ago, gapping on earnings here. Back into resistance, but again, you're only 8% off yearly highs, so that's just one to watch, PODD. Sort of in the infrastructure space, you have Quanta, PWR. Again, probably not going to set the world on fire, but looks pretty good. Nice reaction to earnings, testing all-time highs. That usually means you pull back, but let's see how it goes. And then Chart Industries, I do like this a lot. I've mentioned this a bunch. It's wild, it's woolly, it moves around. It's a $230 stock that moves around like 10 or 15 points a day. So it moves around, but it does have a great, pattern here. It's got great earnings estimates, great recent results, and looks like, again, it's one of these things, it looks like it wants to go higher if the market can just not implode. Just a couple other names. Arista Networks, not older, but just a name from back here. Really, net, again, this is kind of like Albemarle. Net, let's just call this the market top in November last year. Net, the stock hasn't gone down during the bear market. It's not bad, right? Just reported earnings, numbers, beat estimates, all this sort of thing. And today it's kind of gapping up. You can see it's all over the place. Maybe it reported earnings a few days ago. Today it's all over the place, and it's kind of come straight up here, but just kind of noting it for its relative strength. And then last but not least, I am keeping an eye on the sexy sector known as housing. I know everyone thinks housing is going to crash, and maybe it does. Who knows? But this is DR Horton. You can't get bigger than this. This is almost like Schlumberger. Sometimes you can just go with a super big, obvious plays when it's a sector move that kind of gets moving. DHI certainly doesn't look as good as Schlumberger, but I just find it interesting that the group and the stock bottomed months ago. The stock is actually above its 40-week line as opposed to the vast majority of stocks out there. They do have earnings next week on November 9th, so it's up to you, but it's just something I'm keeping an eye on. Again, all of a sudden you got some of these names where if capital I, capital F, you start getting a little bit of momentum on the upside, you're kind of like, whoa, this thing's sitting here at 6-8 month highs and all the bad news and nobody expects it and so on and so forth. So we'll see what happens, but I am kind of keeping an eye on some of the home builders. So back to the market or back to the NASDAQ, let's just see what happens. There's nothing to do here if you're already heavy in cash. You don't have to freak out. I just think it's time for patience, but it's also time to just keep watching. I know a lot of people just are like, oh, the hell with this. I'm going to go watch the 25 political ads on my TV right now or whatever. But, you want to keep your eyes open because I do feel like, cybersecurity and cloud software, no, those areas are buried. But I do feel like there's not just stocks, but a few different areas that if they can get going for a couple of weeks, if we can see some breakouts, like I said, we could have something to work with. As always, we need to wait to see it actually happen before, taking action on it. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.